Gentlemen, this is Steve Harney, the founder of Keeping Current Matters. And this morning, we're going to do a deep dive on something that's a little bit different than what we've been covering. Very obviously, the market has been challenging for every person that is on this deep dive, and for most Americans. It's a kind of a challenging market where, affordability is definitely almost at a crisis mode now. And there are things that are making people wonder, like, maybe I should just sit back up on the fence. So today I want to talk to you about how important what you do for a living is, your chosen career, how important that is, not just to you and your family, but to families all across America. Because at the underlying basis is that owning a home is still a major piece of the American dream, and not just for financial reasons. I know we're really concentrating on the financial reasons with mortgage rates spiking up the way they are, but there's a lot of reasons. And I want you to feel good about what you do for a living. And I want you to feel energized about making sure you're out there right now trying to help as many families as you can. So let's get started. How does homeownership impact a family's net worth? Well, the important thing that we understand is that we need to be able to explain that. We need to be able to explain that in a bunch of different ways, not just from the financial net worth, but a family's net worth as a family even, all right? But it's really, really important that we can explain it. Part of the deep dive is most agents know what's happening. Good agents understand what's happening. Great agents can explain what's happening. And that's what we want you to come away with today, be able to explain exactly what homeownership means to a family, both from a financial and non-financial point. What we do for a living is crucial. So let's start with America's belief in homeownership, because sometimes people tell us, well, I don't think that's the dream anymore. Well, let's take a look at it. Homeownership remains the number one feature of the American dream. This is from a survey from Bankrate. Owning a home is number one. It's over being able to retire, having a successful career, or getting a college degree, and it's over most of them by a lot. People want to believe in homeownership. They do believe in homeownership, and they see it as part of the American dream. What do they see as the benefits? This is from Fannie Mae's National Housing Survey, and these are not all financial benefits. All right, living in a place where you and your family feel safe. That's the benefit of homeownership. Living in a nicer home, living within your budget, having less stress. There's nobody going to be knocking on your door a month before your lease is up saying, well, sorry, we decided to sell the house, you're out, or sorry, we decided to hike the rent up by $500 because our property taxes just went up. When you're in your house, you're able to do what you're looking to do in a big way. Now, what I did is I broke down the top three in each category. This is the percent who say it's better to own if you want to achieve. If you want to achieve having control over your space, number one. If you want to, these are the lifestyle benefits. Having sense of privacy and security. Having a good place to raise your family. Now, on the financial side, the green side, what are the three major reasons? Having the best investment plan, and we'll talk about that in a second. Being better off financially overall, and we'll talk about that in a second. Saving for retirement and building up wealth, which is exactly what this is all about. Now, we talked about some of the non-financial advantages and that people really want to live in their own home and have their own control of things. But Americans' belief in homeownership as a good investment. Let's dig deep into that. First off, Gallup does the survey, and real estate has been the America's top choice for the best long-term investment for all these years running, and it's increasing. Now, last year, 2022, or this year, I should say 2023, obviously because interest rates skyrocketed over the last 18 months, that number has come down some. There's no question about that. It's less people see it as the best long-term investment because they're not sure if they can even attain it. That's what we're about. That's what we're here. We're trying to help them do that. But if we take a look at this and compare it to the other choices that they make, real estate is still number one by a lot. Even after full nut, in the worst of our times, we're still considered the best long-term investment. That's what you do for a living, ladies and gentlemen. You help people garner what they believe to be, and which history has shown is the best long-term investment. And that's from Gallup. And if we take a look at it and we break it down, all right, here's the breakdown over the years. But if we take a look at the most recent year, what we can see is, again, we're well above the other forms of long-term investments. And that's really, really, really important, ladies and gentlemen. Crucially important. All right? We have to understand that it's not about the immediate financial challenges that people have in purchasing a home. Like people will say right now, they'll say, well, renting a home is cheaper right now than owning a home. Yeah, and that's probably true in most of the country. When interest rates where they are, that probably is true. They can get their rent payment right now cheaper than they could buy a house. But where's their rent payment going to be in 5 years from now? Their mortgage payment's going to be just about the same. Slight uptick, property taxes, insurance, but basically it's going to be the same for 30 years. Where's the rent payment going to be in 10 years as compared to their mortgage payment if they purchase today? Where is their rent payment going to be in 20 years? Where is their rent payment going to be in 30 years? Because they can't compare it to their mortgage payment anymore because the mortgage is paid off. So the monthly housing expense for an owner goes to virtually zero, where the rent continues to climb in our later years. We have here, we also show here that Americans think the road to riches is, and this is a very recent Lending Tree survey. Americans think the road to riches is in real estate more than any other. So we have several different surveys all saying the same thing. The numbers are a little bit different, but they're all saying the same thing. Real estate is the best long-term investment. Now, ladies and gentlemen, understand that's the business you're in. Help people acquire their primary residence or even investment properties. You're helping people achieve their dream. You're helping people realize that they can invest in what they believe to be the best long-term investment there is. We already know that, but the consumer also believes that. Now let's give a little proof to this. Homeowners' impact on net worth. The 2019 to 2020 growth in median net worth was the largest three-year increase over the history of the modern survey of consumer finances, more than double the next largest one on record. So let's just take a seat back right now. What they're talking about is the Federal Reserve Board does a survey every 3 years. They don't do it every year, every 3 years. It's called the Survey of Consumer Finances, where they delve into a bunch of different things. But one of the things they delve in is the net worth of Americans. And what they've shown is in that 3-year span from 2019 to 2022, the report just came out weeks ago, matter of fact, days ago almost, that this 3-year period was the greatest on record and more than double the next largest one on record. So now what they looked at is net worth. And one of the things in our industry we want to say is, all right, what's the difference between the net worth of a homeowner versus the net worth of a renter? Is there a major difference? That's what we sell. If you buy a house, you're going to have savings. You're going to have savings. You're going to build wealth. You're going to have a retirement account right in your house. That's what the American people believe is going to happen. But does it happen? For families that own their primary residence, housing wealth increased substantially between 2019 and 2022, as the rise in house prices over this period far outpaced inflation. The median net housing value increased 44% between 2019 and 2022. People who owned a home, their net housing value, how much the house was worth, all right, increased 44%. Right, that still doesn't tell us what's the comparison. So let's jump right into the comparison. Bam. The net worth of a homeowner is $396,000. $396,200. The net worth of a renter is $10,400. Now, ladies and gentlemen, when you're sharing this, understand there are a lot of people going through really difficult times right now. So you can't wave this around like a flag. There are people right now that want to get in home ownership, but they can't. They can't afford a house right now. They're ready and willing. They're just not able. So we don't want to parade this around that, you should have been a homeowner. But what we do want to do is overcome some of the fear in the market. There are people that are ready, willing, and able to buy a house, but they're nervous. They're fearful. Is this really the right time to buy? Now, we already know that their long-term thinking is that buying a house is a great long-term investment. We already know their thinking is there's no better long-term investment. But if they're a little bit nervous right now, let's reiterate that what they already believe to be true is actually true. Let's take that fear out of them. Everyone on this call has had either a buyer or a seller that really wants to make a move, but they're a little bit nervous right now. There's that fear. And we know the best thing for them is for them to overcome that fear. Now, I'm not suggesting we try to sell a house to someone that's not ready, willing, and able. If they're not ready, if they're not willing, and they're not able, fine. They shouldn't purchase a home. I'm talking to those that are ready, willing, and able, or for those that are ready, willing, and able, but just a little bit too afraid right now. We can't let that fear win. We have to explain to them that short term, yeah, there's going to be a little difference, but long term, look at the advantage. As a matter of fact, I went back, going back to 1989, and they didn't do it. Well, I guess they did do it every single 3 years since 1989. And I looked at, well, did it change much over these last 3 years, or was there always a big divide? Ladies and gentlemen, there's always been a big divide. There's no question about it. Owning a home from a financial standpoint, from a net worth standpoint, is the greatest investment you can make. We have to make sure, again, not that we're waving this flag like the na, but that we're letting this information come out there and people understand that. Now, I've broken down from 2010 going forward, the most recent. And I said, let's take a look at the difference. Even in 2010, really at the heart of prices dropping, there still was $181,600 difference between the net worth of a homeowner and a renter. And look how that has grown. That's like crazy, ladies and gentlemen, just absolutely crazy. Now, ladies and gentlemen, that last spike up, that's not going to continue like that. That's going to flatten out. We know that appreciation has to flatten out. It's the best thing for us. It's the best thing for buyers and sellers. And it's the best thing for the real estate market, that prices flatten out some, that we go back to normal appreciation, not the 44% over 3-year appreciation we just came out of. That's part of the reason we have affordability challenge. But as mortgage rates moderate, and I believe they will, we'll do a deep dive on that next week. As income continues to go up, which it is, if prices start to moderate, they don't have to come down, but if they moderate slowly, or the appreciation moderates to a more normal level, then that affordability crisis will begin to wane. And that's what we're all waiting for right now. But ladies and gentlemen, please, we have to take the fear out of the market. Now, people will say, well, Steve, that's the reason homeowners, because they're older and they do that. And there's a lot of reasons why, no doubt, that homeowners have more net worth than renters. There's no question about that. But I'll give you one really interesting point to that. This proves that home equity helps foster new businesses. The green line here is tappable equity. That means how much equity does a homeowner have? Up to 80%. If they keep 20% equity in their home, because everyone should keep 20% equity in their home. So the tappable equity is the 80% of their home. of the value of their equity. The blue line is U.S. small business applications in thousands. Take a look at how those two lines are they're just almost exactly the same. They have a symbiotic relationship. And as the capital equity start to level off a little bit, all right, people start borrowing against some of the equity they had. What wind up taking place is the number of small businesses started to slow up. So what am I saying to this? The equity that people have in their homes, that difference in net worth is partly because the equity they have in their homes they use to start a business. There are great stories in American history of people that took an equity loan and started a business in their garage. And I'm not talking about small business. I don't consider Apple a small business. Started in a garage. I don't consider Under Armour a small business. Started in a garage. So part of that net worth buildup that we talked about really comes from the fact that not only is the value of their home rising, they have more opportunities, more options to do other things with that equity over time. And that's like really, really exciting to me that that's the case. Now, I'm sure you're going to want further breakdowns. Well, Steve, what about by age? What about by income? And further breakdowns are coming. I don't want you thinking we forgot about those, that we didn't. However, the Survey of Consumer Finances is a very, very thick paper with all sorts of tables associated with it. And we know that we have resources right now that are going through those pages upon pages, tables upon tables, to give you a breakdown in different categories. I want to show you a couple that I don't want you to share because this is from the 2019 report, but I'm using them as an example for what you will have in a couple of weeks. So again, don't share these next 3 slides. I'm giving them to you so you set yourself up knowing, hey, listen, we have this coming. Because if you show them the one slide showing the difference, they might say, well, what about income? What about this? What about that? What about, the income level, the age level? That's another thing that people like to talk about. So let me give you an example of a few of the breakdowns we're going to have coming to you. And all you have to do when you show that first slide is say, I have more information coming. I'll be more than happy to share it with you. Here's the breakdown last time by income level. And what you could see, just go all the way to the right-hand column, no matter what the income level was, there's a gigantic difference in net worth. So people say, well, that's because rich people own houses. Well, no, even with rich people, if they own a house, they have a lot more money than rich people that don't have a house. We'll break it down for you so you see exactly how much the housing portion of the net worth actually is. And we can see all the way up to $192,000. It's a major portion of a family's net worth. And we'll break down the most affluent because we want to prove that it's not about just having money, you're having great income. Because here, these are the people that are making over $192,000 a year. And what we can see is that if you're an owner, you have more non-household, the non-housing portion of your net worth is still greater than if you're a renter. I want you to use these slides, not the last 3, I want you to save those, but I want you to use these slides to get the word out that from a financial standpoint, maybe right now, renting seems, financially more feasible or maybe even better to some people. But they're missing out on building that equity. They're missing out on tying down, for the most part, their monthly housing expense. When we know their monthly housing expense is going to really skyrocket. You have to get that out. And for the KCM members on the call, we have a new Real Talk, which is for the non-KCM members. We give you the script. We allow you to download it. We make it nice and simple. You look in the camera, you read the script. There it is for you. All right. You can customize it if you want. and they just record and share. They did a great script on how ownership impacts net worth using some of the slides I showed you today. So if you're a KCM member, definitely jump all over that. Next week, we're going to go right at mortgage rates and affordability, what I call an unholy marriage. And that's exactly what we're going to cover next week. But before we leave, I just want to say one thing. And I want to say it directly to you. I've talked a couple of times today about fear, that there's some fear in buyers and sellers' minds because they're hearing all these crazy headlines, or they're seeing all these crazy headlines. And, you know, their Uncle Charlie, who lives around the corner, is saying a lot of stupid stuff. All right. And he's backing it up with a YouTube guru that doesn't know what he's talking about or what she's talking about or what they're talking about. We have to remove that fear, ladies and gentlemen. And the first step in that process is removing your fear. I know you're strong. You're on this call. You're moving forward. You got up this morning and got on this call. Some of your competitors are still in bed. Some of your competitors are hiding under their beds. But you're here. So I know you're strong. But you'd almost have to be psychotic not to have a little trepidation in today's market. We have to remove that, ladies and gentlemen. And I want to tell you a story about my son. Not the son that's involved in KCM, my younger son. He came out of his mother's womb dribbling a basketball. He loved basketball since he was a little kid. And he worked really, really hard to be the best basketball player he could possibly be. We lived in the suburb of New York. The best basketball, especially for a point guard, which he was, the best basketball is played for point guards is played in New York City, has been for years. He wanted to play on one of the city teams. Now, I knew he was cursed with my genes. He wasn't that tall, definitely wasn't that fast, and he really couldn't jump. And he was going to go play in New York City against some of the greatest basketball athletes in the world. And when he was 15 years old, he tried out for a team called the Gauchos, or AAU program, the summer league program that travels across the country. I was nervous bringing him into the city that day because I knew he was going to be competing against the best of the best, and I wasn't sure athletically whether he could compete. I sat in the stands next to me with 3 other fathers, all former NBA players. Their sons were also trying it. I really didn't think there was any chance my son had whatsoever any chance of coming. Well, the first day of tryouts was a lot about strength. It was really a lot, and my son really was strong. He worked out with a trainer for physical strength since he was 12 years old. So he had 3 years of physical training for his strength. So he got through that first practice, made that first cut. Second practice kind of concentrated on endurance, and he could run forever. He didn't have a problem with that. And he made the second cut. The third practice was about agility. And I knew he was going to struggle there. So what the coach did, he lined up 5 chairs, one in front of another, 5 in a row. And the players were asked to jump over the chair from a standstill, jump over the chair to the other side of the chair. So if you think about a kitchen chair, you're standing behind your kitchen chair, nothing's in front of it. You have to jump over your kitchen chair land. But then you have to jump over the next chair, the next chair, the next chair, and the next chair. And some of the players that were there, again, they were tremendous athletes. They did it like it was nothing. They jumped over them like they were antelopes. It was all zoom, 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 like the chair doesn't even exist. When my son's turn came up, he looked at the chair and he couldn't move. And the coach walked over and he said, "Fear won't win." And my son looked at him and he said again, "Fear won't win. It's the fear in you that's stopping you from jumping the chair. It's not your body. It's in your head. No, I thought the coach was crazy. I thought he was pushing him a little bit too hard. I actually stood up in the gym to maybe go get my son. And one of the other parents, one of the NBA guys, touched my shoulder and said, give him a chance. And sure enough, my son tried to make that jump. His foot hit the top of the chair and he came crashing down. Now I'm definitely saying, I'm worried not only about his physical well-being, I'm worried about his emotional well-being, that he can't do this in front of so many people. But the coach put him right back and said, fear won't win. Tell yourself, fear won't win. And believe it or not, my son jumped over the chair. When he tried to do the second chair, he hit the chair again and fell. And I said, well, he already jumped over one chair. That's pretty cool. And the coach put him back behind the first chair. He goes, no, you got to do 5 in a row. And again, he yelled at my son, fear won't win. And my son made it over the first chair, made it over the second chair, and then he got scared. He was tired. His legs, he wasn't sure he could do. And the team came over and started screaming, fear won't win. And one by one, he jumped over all 5 chairs. He learned a tremendous lesson that day. I learned a tremendous lesson that day. Fear won't win. There are times we don't think we can do something. There are times we question ourselves. There are times we're saying, maybe I shouldn't give up. No, ladies and gentlemen. Fear won't win. Can't. So, now what is this coming to? Well, my son then went on, he made the team, believe it or not, he made the 15-man roster, went on and played for that team in the national championship game and won. And he has a ring, a championship ring, the size of my fist, that he very proudly shows whenever anybody asks. He played in the greatest team in the country, and he won the championship. That was pretty cool. Then he went on to play Division I basketball. Then he went on to play semi-pro basketball in Italy. And right now, he's coaching basketball at Harvard. He's on the coaching staff of the women's basketball team at Harvard. And ladies and gentlemen, this is what I know. If Mark Jones, that first coach, didn't tell him fear won't win, he wouldn't be coaching. He wouldn't have played in Italy. He wouldn't have made a Division I team. He wouldn't have won a championship. He would have not have reached his potential. Now, this is the first time I've ever done this on a deep dive, and I'm telling you seriously. We all need that now. We all need to say to ourselves, fear won't win. But we also need some place to belong to. What helped my son so much is when all those teammates came running over to him, screaming, fear won't win. That gave him the power to keep on moving. I've never advertised Keeping Current Matters. That's the company that I do this for. Because I just wanted to give you great information every Monday. But what I'm realizing in the market right now, you need teammates. We all do. You need somebody standing behind you or next to you saying, fear won't win. Let's go do this. There are 30,000 agents that are subscribers to KCM. Small army. They're moving forward. They're not allowing fear to win. Join us. Go to keepingcurrentmatters.com, keepingcurrentmatters.com. Check us out. It might not be for everybody, but I'm going to tell you, ladies and gentlemen, you're going to need teammates. You're going to need people that believe in you. You're going to need people that you can lean on. And you're going to even need people to lean on you. That's how we get through this. Join the team. Remember, and I'll end it with this: fear won't win.